before we attack the cash flow statement, let us first have a review of the financial statements. What are financial statements? So, financial statements are written records that convey the business activities and the financial performance of a company. Let's magnify it first. Alright. So, financial statements are often audited by government agencies, accountants, firms, and others to ensure accuracy and for tax, financing, or investing purposes. The three major financial statement reports are balance sheet, income statement, and the cash flow statement. The balance sheet provides an overview of assets, liabilities, and stockholders' equity as a snapshot in time. If you would remember, for the heading of our balance sheet, we have there the name of the company, and then balance sheet, and then as of a certain date. So what does a company balance sheet tell you? It shows what a company owns and owes and how much shareholders have invested. So this is the balance sheet formula. We have assets equals liabilities plus capital. Okay, so assets are what the company owns. These are the economic property of the company, which includes cash, inventory, property, and then liabilities are what the company owes, yung kanyang mga indebtedness, pagkakautang, which includes rent, wages, utilities, taxes, and loans. And then we have the capital or the shareholders' equity, which includes how much the shareholders or the owners of the company have invested in the firm, and which includes also the income earned during a period. Then we also have the income statement, which primarily focuses on a company's revenues and expenses during a particular period. So if you will remember, in the preparation, the heading would be the name of the company, income statement for the period ended. So that's how they differ for the balance sheet as of ang nakalagay sa date. For the income statement, for the period ended. It could be prepared either quarterly, annually. Once expenses are subtracted from revenues, the statement produces a company's profit figure called net income. So what's an income statement? It shows a company's financial performance during a particular period. So some of the accounts that you will see there are the revenue, the expenses, and then if you deduct the expenses from the revenue, you come up with either net income if your revenue is greater, or net loss if your expenses is greater than your revenue. The cash flow statement measures how well a company generates cash to pay its debt obligations, funds its operating expenses, and fund investments. So from the definition, we have here the illustration. You have there for the heading the name of the company, and then cash flow statement for the year ended December 31, 2016, for example. And then as you can see here, this is an example of how a cash flow statement looks like. So we will proceed with the discussion of the CFS in the Canva.